Good morning, it's 8 o'clock, the 1st of November. Welcome to a new month, everyone. I'll quickly go through the disclaimers. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, I know we've got some news coming up, so we'll just take a very quick look at the snapshot of Bookmap for NQ on the left and ES on the right, and that is zoomed out horizontally and vertically, and the reason really is to show you that some of that liquidity banding was really useful, and that's one of the reasons why we do zoom out. Anyway, we'll get into that, but I'm aware that we have the ADP non-farm payrolls at 8:15, so let's quickly run through some of the slides. And yeah, I hope everybody's having a good start of the month. Let me just move that one along. So yeah, if we look at what is coming on board, I'm just checking YouTube is still running as well. Yep, it is. That's great. Yeah, everything is fine. We've got the ADP non-farm employment change at 8:15, and it's also a heavy news day because if you look at 9:45, you've got the final manufacturing PMI, and 10 o'clock you've got ISM manufacturing and JOLTS, and you've also got some construction spending, so 10 o'clock is a big one as well. But we've got a big one at 8:15. I have a feeling it's not going to be as big as the 10, but we should still get some volatility, and we can try and get that financial juice audio feed working for us at that time so everybody can share in it and watch Bookmap live. Okay, just looking across there, if we look at the daily, yeah, one thing I want to point out here, I mean, this is the trend line or approximation of that trend line or daily liquidity on ES. This line just down here, the bottom one, is called the reverse trend line. I don't know if many people have studied these reverse trend lines. They're often used where there's no neat line that joins up all the swing highs on the way down or the swing lows on the way up. And this is a case here because you've got three that are on a trend line, and then the fourth, if that is the fourth swing point, is nowhere near. At that point, you then draw a reverse trend line which connects the lows on the way down. And the idea, and this is from somebody who I revered, David Weiss, who is no longer with us, and I do recommend his book, Trades About to Happen, if you ever want to really read it about trend lines, some of the Wyckoff stuff, some of the Elliott Wave stuff, but he was very good at what he did, and he's also very good at the springs upthrusts. He sadly passed away a couple of years ago. But anyway, moving on to what he actually said about these reverse trend lines. The idea is that if you've got these reverse trend lines and it's steeper, and you can see that the angle is steeper on the ES going down than it is on the reverse trend line than it is on the trend lines, so this rather than this, and then we break that, that has a very high probability of being a fake breakout, in other words, rebounding quickly. So that is what happened here, but that's really the main purpose of these. And I'll show you one on the next slide which isn't correct. So if we move on to that one, you can see here that the reverse trend line, or the one that I drew previously, that's shallower than the normal trend line on NQ. So that same rule of thumb about high probability breaks of that does not apply. I know it did happen here, but that's not what he wrote about or talked about. So let's just move on again. I know I'm doing this in a little bit of a rush. It's just because we have that 8:15, and I really wouldn't mind just having a look at Bookmap before we do it. Okay, the 10-minute chart again, it's really to see where we are in terms of where we are vis-a-vis yesterday, and you can see that, you know, even though I'm just remembering where I did actually do, yeah, I did do this one just now, just checking, because we've been on such a good down run here on this channel down. Yeah, we're only at yesterday's mid on ES, so all we've been doing is going through the top half of a very wide value area, and we can look at that on the TPO in a little bit. And NQ is the same thing, just exploring the top half of that large value area. So if we get rid of that and we get back to the charts, let me just drag over the TPO so we've got the real one and we can still look at Bookmap at the same time. So here I pointed out in the channel that this is a poor high, and we've actually got a resting iceberg way up from where we are at the moment, and you can see that up there at 4211. So I do not predict anything. I don't think anybody should. I think if you start predicting things, you get trapped in trades and you'll miss some much better trades. But it would not surprise me, because nothing really surprises me in this market, if we didn't have a big reversal either off this news or the 10 a.m. news, and we came out up and took out that poor high either today or tomorrow. That really would not surprise me. It's really hard to draw an estimated value when the profile looks like that. So what I did was I went to the LVN of yesterday just there. I mean, if I break that down into the value, you can see that the value is essentially the top half here, or the top 2/3, and that's what I took up to as sort of an LVN or a previous day's low from back over here. But really it's pretty meaningless when it's that big, so you're expecting some decent swings, and you would not be surprised if it was choppy. That's all that really tells me. You know, we can get some much better looks from other days, but that's all that I got on this one. And let's get rid of that one and do the NQ, because I still, as I say always, I do trade more NQ in the ETH session, simply because I find it more readable and the swings are better in terms of getting multiple R results. So yeah, for NQ, I basically put my estimated value range as the whole of yesterday's range in RTH and a bit more. So just taking it all the way down to this LVN here and that up to the LVN there. In other words, another massive range. So we've seen that we traversed half of it, but we could have gone much further. Why do I say that? Let's just drag in the stats. Try and make them a little bit bigger so the font is not terrible. So even though the relative volume is only 67%, we've got about two. That's actually relatively good in terms of, if you look across at ETH, 82 out of 120, that is 2/3 relative volume, 2/3. So it's pretty consistent. So sometimes it's useful in that way. Again, I wouldn't use it to predict exactly how far the range would be, but it can be useful like that sometimes. But it is certainly more useful than not, and that's why I have it. So basically all I'm saying is, we're in a wide value range where we're chopping around. We may be due for a bounce, but let's have a look at Bookmap to see what it was telling us as we come up to, what time is it now? 8:08, so we've got about 6 or 7 minutes before this. By the way, if anybody's got any questions, feel free to ask them on YouTube or the Discord channel. So yeah, what was this telling us? So if we zoom right out, it's really hard, again, and I've used the word really hard a couple of times here. The algo bands in NQ make this picture dreadful. But what you can see is, if we look from this evening onwards and we drag the NQ back, you can see these thick bands here, there, and there. So that they did provide some use, both in terms of magnetism to draw them down, and then resistance in terms of a wall where they haven't been able to penetrate above. So in ES it's been much better. So this is the whole of the ETH session, and you can see this huge wall, and this often happens when you get this kind of wall, which is many levels of high liquidity. It tends to attract it and then provides a very strong first point of wall in resistance, in this case, because it was going up, support if it had been going down. So that is really useful. I mean, you've got this liquidity earlier on, but as they build it all the way up there, it becomes very difficult for them to go all the way through, and that is the case. But there is that resting liquidity at the overnight high, effectively. I think that's where it is, 4211, 42. Let's have a look. 421150, and if I have a look, just checking where it is on my other chart, yeah, 421150. Okay, so that is the overnight high. So again, those can often be a really good target once we get into a long to go for, and it'll be interesting to see whether that is the case here. There was some quite good action in NQ a few minutes ago at 751. Some really good signs of a plunge down and then clear buying. So if we actually try and blow this one up at 751, go all the way there, see what we could have seen in Bookmap. 751, right around here. So I'm just saying that this was a really good tail, and there was also some buying that went in there. It's not easy to see the buying there, but you can see a very good trap tail. I think I mentioned that in Sierra I've got like a visual time and sale, so I can see when we get buy sizes that I'm interested in NQ at lows. So when I get multiple orders of around about 20 plus in this kind of zone, it gives me a clue that they might be coming for some kind of reversal, and that is what happened here. But what I find the most useful in Bookmap is this tail, and quite often these large volumes hitting liquidity, or this one just plunged through. So on a candle chart, that would have had quite a big wick, whether it's a 30-second or a 1-minute chart. And on a 1-minute chart, you'd probably have had, let's draw. I haven't actually got my drawing tool, so let me drag it across and draw what we would have likely seen. If it's going to come for me. Sometimes this drawing tool is painful. There it is. So on a candle, you'd have probably got some nice candles. Depending on the time frame you'd chosen, you might have got candles like that. And that's how you can equate that kind of action with what you see in Bookmap, with a price line. I've got a price line because that's what I prefer. Some people prefer bid and ask. I like it being discrete, so it almost blends into the darkness of the heat map. But that's essentially what you would have seen on a candle chart. But I prefer this, especially these large trades. Okay, and we are going to turn on the financial juice feed because we've got literally 2 minutes left. Let's get back to there, and let's talk about where we are now. So you can see on this that they put this resting liquidity up at their 4200s, the nice round number, and now they're driving into it right into the news. They've placed some liquidity down here, and they've removed some liquidity a bit further down. So I'm not expecting them to go all the way down there at this news release, and I'm still watching this resting sell iceberg up above to see whether they either go for some rapid drive now or later. Okay. I mean, when we get a chance after this news has died down and we aren't doing the live order analysis, we can go back and look at some of the stuff that we could have seen in ETH, especially around the London session. I was trading today, and I hope I'm going to get a chance to trade tonight. Probably will not trade the RTH Open, but probably from about 9:40 a.m. Eastern onwards, I'll give it an hour and a half, 2 hours max. So we have 4201. They've lit that up, and they've also lit up this area here, 4204. So let's now begin to zoom in. Okay, some of you may be hearing that feed. We're down to 1 minute. Please can you activate subtitles in your video? That's a comment from Parlins on YouTube. Sorry Parlins, I don't have control of the YouTube channel. It belongs to Bookmap. I'm essentially a guest speaker, so I cannot change those settings. I will slow down now that I've done my opening 10 minutes. I just wanted to speak quickly because we had the news coming in now 10 seconds. So let's just see what happens here. Okay. So the news was cooler than expected, but higher than the previous. That's what the words were. I'll turn off that stream now so we won't get distracted by it. So the first thing that they did was go straight up to this liquidity marker, which was actually got removed right on the news, but that was the marker they'd put there, and they went straight up to it. And NQ went straight up to its resting liquidity as well, and now we're chopping around or retracing the scene of the crime. So maybe once again we'll try and draw essentially really around about here. I may be out by a tick. It might be a tick higher or 2 ticks higher than that. So we've retraced down to the scene of the crime, but we haven't gone to the other side just yet. So let's just see up above, see if they've removed anything or they've left them, and below as well. So we have to keep an open mind with this. We can't assume that it's going to go straight up, even though that was likely. I mean, for example, I put into the Discord channel when I woke up a screenshot of that poor high from yesterday's RTH session. If I had been fixated upon that, I would not have had any long or short trades in the London session, because I would have been, I would just let that consume my mind rather than let the market tell me what it wanted to do right now. And right now, it looks like we're trying to get some fuel before we go anywhere. So this is kind of what I was thinking, that we wouldn't have the level of volatility that we're likely to get at the 10 a.m. release. I'm just watching it here before we talk about anything in particular. So the resting iceberg is up there, and I'm just marking it for people. So that's the iceberg. Then you've got this scene of the crime. So I'm just re-identifying the market generated information. Those are the two most pertinent ones. And we've got some resting liquidity up here at the top. And if I go back to the cursor and zoom down, all these levels are going to be wrong now, but you've got this liquidity band below as well. So that is the problem, where you're not drawing in Bookmap itself, but you're drawing on the screen, that all those markings will be wrong. So essentially we're just in a small band here, so between 4201 and 4198, so a 3-point band. That's pretty tame for a large economic release. It's marked red on the calendar that I looked at, but maybe it's an orange kind of economic release on some. It didn't used to be the huge one. Non-farm payrolls itself, yes, but not ADP non-farm. Yeah, so I'm still favouring an upside move eventually. I mean, I think part of what we saw in the European session was really getting fuel to go up. In other words, it's the usual, the market goes down first to go up. But it does not mean we won't chop around here until 9:30. If we look at the NQ resting liquidity over on the left, even though I don't tend to look at the round numbers, which here is 14,450, we've got another one which is almost as large, 2 ticks below it. So it takes it out of just a round number equation and draws my attention to it as a potential magnet. Yeah, and you can see what essentially happened on the news. Spike up in NQ, came back to the scene of the crime, spike straight back up. This is different to what I was talking about, the way that they often take back some of these big spikes, because this is a news-related one, so it doesn't fall into that category, but it is what happened there. And now if we zoom right in to work out where they're accumulating fuel, so we're just watching these delta tails to see where they're trapping people to potentially get up to this resting liquidity up there. So the first thing that they had was liquidity there, and you can see within the space of 3 or 4 or 5 ticks a lot of red delta, and they've used that as fuel. They're trying to get up there, but it's a question of have they got enough fuel yet, or they're going to have to play this chop game for another 30 minutes. And when this scene of the crime is breached on ES over here at 4198, then I'll lose my my bullishness for the time being. So it's really the line in the sand in the same way as when we looked at this on the last time we had a news release. Can't remember whether it was on Friday or last Wednesday. And probably need to zoom out again to have a good check of how far NQ could drop to go and find something. There's nothing major below, just these are really just temporary little algo bands of liquidity. So it's really just watching these areas and seeing when they're going to get the fuel. So you want a nice really long tail of red to drive you back up. And here we are. On Friday, I think what we had was a spring right at the scene of the crime, so it'd be interesting to see if they do that again or they play a different game and go to the other side. Just doing a time check. So we haven't quite had 15 minutes from the news release. It's something that I tend to talk about occasionally, which is when it's a trend day and you have a major economic release. I'm not sure this falls quite into that category. I'm not talking about the trend day because I can't predict the future, but this news release not being of the major category. But when you do have a news release of a major category and you have a lot of volatility at that release, then if it is going to be a trend day, the high or low for the next umpteen hours is normally set within the first 15 minutes of the news release. And part of it is it gives you the fuel for the exploration. You've got not just the volatility in the intraday price action, but you've also got other players coming into the market who don't care about that in the same way as you and I might, and they have their own fuel to drive it much higher or lower. So we're just chopping around exactly where that news release was at 8:15. Both in ES and NQ. Okay, so I think maybe we should move on from there. Okay, as always, I always like to talk about something that's on my mind and something that may be of interest to people watching this webinar, and may be something that you're not necessarily thinking about in your current day-to-day trading analysis. One of the things, I was watching a YouTube by one of my friends from the internet that I made a few years ago, Fat Cat. I don't know if many people watch his videos, but they're quite good. And yeah, he was saying at the the very end of his YouTube, that one of the tips that he recommended to people was to learn poker. Many of the people who are successful at trading, or there is quite an overlap between the ability to be successful at trading and the ability to be successful at poker. It was always something on my list that I never ever got around to, but I thought on this occasion, that would fill my little education bucket for me at the moment. And it's also something, as I go through it, I'm happy to talk about in these webinars. But one of the things that does strike me straight away, and I wonder if I can actually draw a little table. Let me see if I can just get my little square or circles here. Let me just do it. Yeah. So while we watch this action at the scene of the crime, I'm just going to basically draw a table, a poker table. And there is a reason why I'm going to do this. So these are all just people. I'm not sure whether they've got the right number of hands or not. And I need a freelance tool, or maybe I'll just use, so the dealer. The reason why I wanted to draw it was because of the SB and the big B. Okay, I'm back to the cursor. So I'm trying to do this and watch the market at the same time, so we have this live order flow analysis. Not that there is much happening, and actually that there is a confluence between that and one of the initial learnings that I picked up from from tips on how to learn to be a better poker player. Not that I'm much of a poker player. Okay, I've drawn this table because after the dealer who's here has dealt the cards, the person who's at the SB or small blind position must place the minimum bet. If it's a $1 table, that would be $1, and then the big blind person, the person who's sitting here, has to place the big blind, which is normally double that. So if it's a $1/$2 table, this person would put $1 down and this person would put $2 down, and that would be obligatory. They'd have to do that if they were in that position, whether they liked it or not, right? But what is interesting and where it does cross over into trading, just the very, very first point I picked up was that there's a lot more in terms of mathematical certainty in the probabilities of the particular cards that you dealt with. So in poker, on this first deal out, you get 2 cards each, and then during the course of the game, a further 3, then 1, i.e. 5 cards are placed in the middle that are open to everybody. But a lot of the maths about being successful is about the first 2 cards that you're dealt with, right? And it's the quality of your hand, and there are a lot of views that unless you have a good hand, and a good hand essentially is defined by having either a pair or a royal kind of card, or basically 2 high cards, preferably of the same suit. And if you don't have those cards, then you should just fold and not play. But if you're in these 2 positions, you have to play. So they put money down. You in your trading will have put money down, but because they have not necessarily got good hands, if they don't have good hands, they'll fold immediately when it gets back to them. So in other words, they will take their minimum stops every single time. And one of the problems that that we have in trading is that there is so little said about getting it wrong and being stopped out that it's almost ignominious, and people never want to admit when they're wrong, and this results in the kind of behavior where you don't accept your stops and you let your stops run, and then you break your trading account. Right? In poker, it is accepted just by absolutely everybody that you have lots and lots and lots of these folds, either at the beginning of the particular hand or the game, or during the course of that hand. Whereas you can look in our trading, and you can look in any Discord. You can look in the Bookmap Discord, you can look in any other Discord, and you will see very, very, very few occasions where people have screenshot and talked about where they've taken a stop. It's really a rarity, even though it's something that I've said when I was looking at the expectancy calculator and showing you how I built mine and how I model what I'm doing on the back of it, and how I model on 50%, regardless of whether I'm beating it by much or not, that I'm modeling my profitability on that and my expectancy on that. So it is something where poker has a direct relation to trading, but I'd say that there's less shame in poker players. Aha, here we go, 8:30. I didn't realize there was another bit of news here. but we've just had a massive pickup in volatility. We've gone straight through that resting liquidity that we were talking about. And now maybe we've had some kickoff towards this resting iceberg up above. So that was the thing that we were monitoring and saying that there was a potential for us to eventually get up there. So NQ has taken off. I'm just reading the news on Financial Juice. Actually, there's nothing really. The news that just flashed up is that the US Treasury boosts refunding by 9 billion to 112 billion US dollars. Okay, so it's all about the US Treasury increasing the finances, and that has been a positive boost for the market, as you can see right there and then. And I'd say that the probability that we're going to tag that resting iceberg has now increased significantly. We've almost got a new scene of the crime, which is just at this buy iceberg here at 4199.25. So you could actually take this line here, or we could just draw a new line, and we could essentially say that that is the line there, and that is now the next line in the sand. So they may come back down a little bit to get some fuel, or they may go straight up there. So we can talk about that for a second rather than me rattle on about poker. It's interesting at this point, for the first time in hours, and if you look when this resting sell iceberg was first placed, our little marker says it was at 2:59, so just coming into the London Open. So for the first time in 5.5 hours, they've moved it. And they haven't taken it off completely, they've just pushed it much further up. So this kind of action has obviously been, or I'm not going to say obviously, has been potentially viewed as really bullish. And it is news, it is news of import. If the Treasury is providing more money for the government to conduct its business, etc., or for whatever other purpose it's doing, then that helps the market. So it's not overly surprising that we're now going up into this liquidity zone here. I might just remove my removing my poker table. So now if you'd had that as a target for some kind of swing trade, as soon as you get to the 4110 mark, if your only target was 4111 or 4211, then you have to be aware that your risk reward is changing rapidly the closer you get to that target. So that there's a lot of mathematics saying if your target was only to reach that, then if you see action that it's going to go away, that there is absolutely no harm taking something close to it. But you have to do the maths and the probability yourself, and you're the one who has your expected risk and reward, so it is your calculation. But there's also an argument here that, as you see in with the sell iceberg, that they've moved it up once, twice, three times now. You can see that once, twice, three times. That there looks like there is potential to hold this trade on that significant news and just let it at least eat into this liquidity up at 4215. So we're now getting very, very close to that resting sell iceberg tag. And so that's as good as a tag, even though it's not there anymore. It's as good as a tag of what was a long-term resting iceberg, and anything that is 5 hours plus is long-term in my particular view. So you've got this liquidity up here that they look like they're marching towards. And some of these people could be these players we're talking about who aren't short-term intraday players but longer-term players, and they've changed the picture as in at 8:30. So one of the things that you don't necessarily want to do is to fade them when they're marching towards something. And remember also that we've got that poor high, which has just now been taken out. So if I drag that back, remember this is the screenshot that I did, well, it's the chart that the screenshot was based on from the beginning of the ETH session, and you can see that's now just been taken out. And I said in my screenshot, this was a marker for later. There is a high probability of that when you've got such a poor high as that. It doesn't have to be taken out by much, but normally it's taken out by a decent little chunk so that you don't end it in a poor high as well. But the first thing we've done is taken out that, and we've had a bit of a pullback. If you look over at the delta tail, this, I keep saying, don't ignore this column because I think it's better than the delta bars. You can see I'm not bothering with the volume bars on my chart today. Just I don't find it as much clarity. It gets in the way of the heat map, and I prefer to see the volume horizontally, both in the volume profile and the delta. And so the resting iceberg has gone. So when they do take it away after such a length of time, what it can mean, again, I can't speak with any certainty on this because I'm not the person that put the iceberg there, is that they have fulfilled whatever it is they wanted to achieve by putting it there in the first place. So they may have had it as a target. Maybe they bought down here and they wanted to sell and take a big profit up here. So maybe that's what they've already done, and that's why they've now removed it. We don't know. We can put in educated guesses, but we can't actually know for any certainty why it is that they've suddenly removed it after 5 hours 33 minutes. At this point, we will have another look as well at the resting liquidity up above, because that's a round number at 14,550, so that we ignore that one. But this one's an interesting one, 47 in the order book at 14,525. So that's an interesting one. It may not be for now, i.e. the ETH, it might well be for the RTH, but it becomes of real interest to us because the picture has become bullish since that Treasury news release. Ballion's got a question in the Discord channel, so I will have a look at that. I've got to scroll up and down so I can read it, and my screen's not in the way. Liquidity can be pulled, added anytime, and you said, well, don't be consumed and focus on the current action. How do you approach higher liquidity levels? For example, at 4240, liquidity of 650 was added around. I'm just struggling because I've got my I've got Discord has put my own screen in the way, so I can't really see it. It was added around yesterday, I'm guessing it says yesterday, and stayed through most of Globex, and 500 pulled out today. I think I partly answered that, Bellion. I think my view on when you've had either a resting iceberg or resting liquidity that's been there for hours and hours and hours, and then you've had some action where it's almost run right up to it, it's often the case that either they've moved their positions, or what they wanted they've already got. So if they'd wanted to sell at that level, they managed to sell that level. So that particular game is over for them, but it doesn't mean that it's no longer bullish. You've got a lot of new players that came in at 8:30, and it clearly is bullish at the moment. In ES at the moment, though, we've got this liquidity wall that we can see up above that we're approaching right now. We're beginning to eat into, but they've moved out of the way. I think there's no interaction there, so if we zoom right in on that one, and we have to double click on that, we didn't interact with that, so that was moved out the way. This one looks like it's being moved out the way as well, so maybe they want to be filled higher, who knows. It is Balian, it is market generated information, but the fact that you acknowledge that it can be moved at any time it means that you accept what kind of market generated information it is, right? It is not the same as somebody buying 5,000 shares in or 5,000 contracts in ES futures. It is not the same as that. So every bit of market generated information has to be treated for what it is, and you can analyze based on previous occurrences of it, the type of information that it normally, the actions that normally result from it. But yeah, they're treated differently. Yeah, and as we look at this NQ liquidity up above, remember price does not move in a straight line, and when you have violent moves, they're often taken back. So that if you get that kind of zig to get up to the 14525, don't be surprised after you've had a violent move up that it has a violent move down before it continues to go up, or maybe it's already achieved what it wants to. Again, if we start predicting the future, we've lost the trading game already. It's the very, very last thing that we want to do. If we go back in time and we talk about this resting liquidity up here, or resting iceberg in ES at 4211, right? We could not predict the future. We did not know it was going to go there within our hour-long session, but we could have had an educated guess, and then based on that educated guess and based on our trading plan and our structural setups, if it was viable that we got a multiple hour or at least 1 hour trade towards it, with a viable target, then it comes into play. Again, we're not in that occasion. We are not forecasting that it will hit it, but we are taking a calculated gamble, which is what a trade is, that it may get there and that there is a reward for that over a series of trades to justify making that calculated gamble. So this is a bit of a wall, so it's going to take a little bit of time to eat through this one, if it is going to eat through it. This is actually longer than I normally do these live order flow analyses for. I think I've been doing this for about 30 minutes just on having a live Bookmap here. Okay, I mean, we can keep watching. I can keep talking about poker as well. It's currently at 8:43, so we've got 17 minutes left today, so we can keep watching this today. So we've talked about willingness to accept stops, or to basically fold in the case of poker, and being more open about it than traders are, especially traders on Discord channels tend to be. I also think that the mathematics are easier in poker than they are in trading, because there are more uncertainties in trading. There are no definite probabilities of anything, because every single trade is completely different. So I may have a spring or an upthrust, the type C supply demand that I like, especially the ones into a wall of liquidity which can act as protection for my stop. I like those, but that does not mean that it has an exact probability every time. In poker, there are some hands which do have exact probabilities, and those probabilities change as the 5 individual cards in the middle are drawn, but the certainties are less. I mean, you still have the certainties are less in trading. The uncertainties are more in trading. The certainties are more in poker. Let's get this one right. But you still have a lot of similarities, for example, with the people around the table, because you can't know what they're going to do, and that is very, very much the case in trading. You've also got to have rigorous discipline. So if you've done the maths in poker and you worked out that there are certain hands that you should not play, and I'm talking about the normal kinds of games, not these high stakes games for $1 million at the World Series of Poker. I'm talking about the run-of-the-mill games that you'd have either online or at a local poker joint, casino, whatever it is. I'm just watching this iceberg here I'm watching this iceberg in ES simply because of the value that's currently being traded there. I think that's 300. it's sizable. What we often see in RTH, or this is almost RTH with these icebergs, is that even though this one is looking quite bullish, it will often chop through it, go to the other side, and you'll think, oh no, it's not held, and then it'll come back and it will hold. So I find in RTH they don't tend to be exact levels, but they're just an interest point for us because they show us where, for example, there may be an absorption of sellers in this zone. So once we've just cleared this zone properly, it becomes very, very bullish if we're clearing it to the upside. So it's quite interesting in terms of where the iceberg was as well if I zoom out. So you can see that the resting sell iceberg and now the active buy iceberg are at the exact same level of 421150. I seem to be a bit tongue-tied tonight, so I apologize. That shouldn't be considered a coincidence. So when you see that and that, it is likely it's the same player. And you also get a feeling that when you do see that particular action of the sell iceberg turning into the buy iceberg, that they bought heavily at today's lows, and they're the ones that drove it down to get a price to buy, to drive it up, to take out the overnight high. Parlins, I think you another comment. Yeah, I think the real driver of this volatility wasn't the ADP employment change, it was the news from Treasury at 8:30. If there was news that drove this. But we did watch the ADP non-farm release, and there was not a lot of volatility for 15 minutes after that. And we have to see whether this now does give us any cause for hypothesis that this could be a trend day in RTH as well. If it was to be a trend day in RTH, and again, I do not like forecasting the future, there is one thing of note that it might be worth talking about here. On the TPO chart, I might make it a little bit bigger. Certainly a little bit bigger vertically. Maybe I'll stretch it out as well. Right. Okay, all these pink lines are virgin points of control or naked volume points of control. And since, maybe I have to go, yep, that's basically the only ones we're interested in. Since we had this big down move, which we looked at on the daily, we've left a few of these in place. So right before the bounce this week, and yeah, right when we got to the low, we can count how many we had above us on this downswing. So we had 1, 2, 3, 4, 5, 6, 7, 8. You can do some statistical analysis on these big down moves of how many they tend to leave. I think I saw a couple of videos on this as well over the weekend, but it's always better to do that kind of analysis yourself. But suffice to say, for this purpose, they don't ordinarily leave that many. So what is that suggesting? You've got the David Weiss reverse trend line, you've got a break, you've got these 8 naked volume points of control. So you had a few different statistical things that you could use in your edge to say that there might have been a bounce this week. And then you have to say, how could you have played that? Because when you see the kind of chop, and if you really want to see the chop, go to the NQ in RTH yesterday, that sometimes playing that, if you're playing some of these tags in the futures market, ain't necessarily the easiest thing to hold. So if you are going to play for some of those, I would always advocate either you take a simple thing, which might be a simple buy in an ETF, or you take an options play. So, you do something like a call spread. Just keep it simple. If that is not your main game, if your main game is intraday, small swings on futures, there is no harm exploring whether you can do these kinds of additional trades that do not interfere with what you do on an intraday basis. And that also, say you take a call spread to go and tag one of these, let's say this one near the 200-day moving average up above. By the way, I'm not saying it'll get there at all. I'm just saying that you could have bought a call spread there. That is not or that should not stop you taking a good short in the futures that you might have got after the London Open today. You should consider them as completely separate trades that have their own statistical basis, or you have your own trading plan about each of them. It may not even be the same trading plan, or it may be a completely separate business that you run for slightly longer term, different markets. But it's something that from your futures you may get that kind of analysis to open up those avenues to go and do something different. But it shouldn't distract you from what you normally do in the futures market either. I think the only danger there, if I talk about that kind of thing, is that then some people get confused. They don't know whether they can go long and short at the same time, and that's not what I'm saying. I'm just saying there are ways to play going long and short on different markets, different time frames, and it's still to be okay. There's still to have viable expectancy on both. Okay, so what have we seen since this 425 buy iceberg that's held this zone, and the fact that it was the same as the sell resting iceberg that made this a tighter level of support than it might otherwise have been considered. And we're still we're taking out the previous overnight high, and we're now up into the next band of liquidity. So and we're also watching up above in NQ. Again, we're not expecting this to go in a straight line, but that 14,525 is still in our minds. So in other words, if you got into a long, my idea, and this is actually going to conflict with some of what I'm learning about poker, is that I would scale out. It's probably because the level of uncertainty, as I said, is higher in trading, so I'd rather take my scales and accept that the trade didn't quite get to where I wanted to. Whereas in poker, you basically play for the lot, i.e. the pile, the pot. So that is where I see them as quite different. But one of the other things I did learn though is that where you have got a very, very good hand, poker players tend to pyramid into it by substantially increasing the size of their bets on their round. Pyramiding into a trade in trading is a little bit harder, but it can be one of the biggest things you can do to increase your bounce. But it's not something I think I'll really get into in these webinars, but it is something that is certainly worth everyone looking at and researching for themselves. Okay, so some of the other things that are directly related, I think one of them in poker to trading, one thing I've already said is that in poker players, they do not play a hand unless it has a reasonably good probability, right? And that is directly related to over trading. So unless you're a scalper and you're basically taking a heck of a lot of trades, you should be a little bit more selective about the trades that you take. Once again, it's up to you to do the analysis of which of your trades has the best expectancy or probability. I'm not going to delve too much into the win rates of it all, because I think that's a horrible thing to talk about in these webinars that are going to get people going on the wrong path. But the biggest takeaway that I've got so far, and again, I'm at the very early stages of my learning, is on the stop side or the fold side. If you build up in poker a lot of mental endurance, which you need in trading from taking all those stops or taking all those folds. It's something that really is a skill that is not spoken about much in trading, that is something that will help your trading out. Occasionally I see people talk about it, which is the non-attachment or not being attached to individual trades. That is something that is so important. I mean, it's one of the reasons why I take my smaller swings, because I mean, as long as they have the multiple expectancy and I have a chance to get those 2R, 3R, 4Rs, etc. I'm not going for a giant swing. I'm not going for a home run, so it doesn't bother me if it does go all the way. If my target was so that I would get my 2 or 3R, that's great. But I find the more I go for these home runs, the more attached I got to those trades, and that's why I don't do that anymore. Tapesh, you've got a question. Far away. It's like quite a nice pullback in NQ. We're going towards this little liquidity area down here. If they're going to get there. Yeah, no, I think Tapesh, yeah, I agree wholeheartedly with you on that one. But I think it's just one of those experiences as well. And I think it's directly because people sell these products, indicators, whatever they are, on the basis of win rate. So people are totally focused on that and focused on not losing. And I very, very rarely see people saying, I'm selling you this indicator because it's got, for the trades that it wins, it has a 2R or a 3R. They're selling them as magic, dark art. And maybe that's one of the reasons why I don't sell anything. So we've got this buy resting iceberg in ES at 4211.50. I don't use these as targets. They are often hit. I just find that I have a better statistical success rate, both in terms of win and R, on the sell ones above. So I don't trust these buy ones below as much. I mean, it's a great zone. Maybe we'll get a little spring below it, bang, and then it'll go up to 4220. But I'm not using it as a short to go and target to get to that level. It's quite possible that if you're going to go into a really short time frame chart there, or into Bookmap there, that you've got this little test of supply just here. You've got this supply that comes in there, and you could have got in there targeting that. That's perfectly viable. It's just something that I'm not going to talk about something that I don't do. So I would not be using that as my target, even though we're about to hit it right this second. There we go, hit. And now we can watch to see whether they grow it. So it's at 425, it's increased to 450, and they're holding it. And then when they're holding it, what are we doing? We're zooming in horizontally to see this tail. So we're looking both at the profile and the tail. And if this was really, really red, would add more fuel to our thought that we're going to go up and hit 4220 before 9:30. But who knows whether we will or not. Right, I think I'm coming up to the end of my hour, so I've only got a few seconds left. I hope again that this was useful. I know I spent an awful lot of time doing live order flow analysis today rather than speaking about any particular educational topic, and I did not really dissect the first 90 minutes of the London Open, which I did trade today. But we can always do it. I'm hoping we will do a live London session soon. So we can see that action there. I prefer that action, but this action here, this 8 till 9:30 action is also good. Looks like we're about to tag this again. So we're at 450 at the moment. Let's just see what happens here this time. We're still holding it, 453, 465, and we couldn't hold it. That's interesting. So it doesn't mean we're not bullish, just means that that has not held for the time being. And so what we're doing again then is watching to see where this goes and what the color of this delta is. And remember, we have two scenes of a crime below, and it would not surprise anyone if we went back to the scene of the crime from that Treasury news release at 8:30. Okay, well, have a really good session. Beware of that 10 a.m. news, the ISM, etc., 10 a.m. Eastern, and welcome to November, everybody. There should be lots of volatility this month, and thank you very much for watching.